the skeptic would say that the template for 2022 might be different because liquidity might not be sloshing around as much. And could that be something that will keep the markets volatile with a negative bias?
Yes. So the US market is having a negative bias. The question is whether India should have a negative bias or not. So first thing is that if you say liquidity is sloshing around, then why last year FIIs put a handsome $3.8 billion in India? Our normal used to be 20 billion a year when there was no liquidity sloshing around. If you look at Korea and Taiwan, they would have combined had 50 billion of redemption, 40-50 billion. And this year, of course, we also have already had 5-6 billion of redemption or 4 billion or whatever. And maybe from October, this has happened. But for the whole year, it was 3.8 billion inflow. So I think there will be some part of the FII flow which came in because of liquidity and easy liquidity. And maybe it's that money which is coming out. But I don't believe that 5, 10, 20 billion, which is what we got in the previous years also. Like in 20, we got, I think, 20 billion. But in 19, we got some 6, 8 billion. Is so much to do with liquidity. That was a general longer term allocation that we had always got. Secondly, if you look at where the money has come into India, maybe 50, 60 billion has come into private equity and these VC funds and VC investments. So that money has a very long tenure, minimum 4, 5, 7 years at least. So that money could not have come due to shorter term or even 2-year liquidity. So when we haven't received money from when the times were good in the part where it could have come, we have got it in the part which is a more complicated part of which is the private equity. Therefore, I don't think that is the main reason for in or out for us. The reason is that if the US market goes down, then all the valuations are reset. I will say Google is available at 22 times and that company is available at 24 times. Why are you trading at 40 times? So the bigger problem this year will be a reset, not of earnings, but how much are you supposed to pay for those earnings?
Sure.
Because that part is a bit loose in life. You're growing at 20%, are you supposed to get 30p or 40p? Who the hell knows? Nobody knows. But broadly, you say historically it was in this range, and it's been in this range relative to itself and relative to the sector peers and relative to the market. So plus minus that we accept. But many stocks have gone way out of line with their historical averages. Mostly in our case, consumer staple guys. Usme ho sakta hai ki either they correct or they don't go up. Their earnings will be still as what you thought, say 2 months ago. But wo change ho jayega. You will not know exactly how to say whether Zomato should be 90 or 60. Who knows? Everything can be justified. So those things will maybe adjust, but you will not. That's why it's a tough year. Because it won't be easy. Earnings are falling, so I'm selling the stock.
That's true. That's true. No, so Samir, are you kind of positioning yourself for what you believe would be the range of valuation for the areas where you are invested in?
So what we've done is, in a broad sense, we don't believe that market this year is going up 20-25%.
Right.
Once you accept the market, by God, thankfully, we'll be thanking God if it goes up, say, 12-15%, 15%. Right. Therefore, a stock that you buy, you don't have to think of a stock here. If the stock is going up only 10-15%, I'm not interested. For example, today I'm very interested in ITC. If my return expectations from the market are moderated, I don't mind buying a moderate return kind of a thing. But if there can be higher confidence, at least this much it can do and it won't give me minus 20. But there are some of these other stocks which are, say, trading at 60-70p. They could easily be trading at 50p and people may still find them expensive. Right? So therefore, so that's why you need a little bit of the market backdrop, in a view of a market backdrop, to say whether I am looking for only stocks going up at earnings growth at 30-40%, because otherwise I'll be left behind the market, which is itself going to go up so much and all that. So because of that, we have changed a few stocks. We have tried to buy, also we are trying to buy at least 1 or 2 opening economy stocks, because we think now there'll be a massive travel related and all that happening, which was happening up to December. And then in Jan, it stopped. But ye sab hoga with some vengeance, at least in the first round.